Hello and welcome everybody. Thank you for joining today's webinar. I'm David Wrigley. I'm the Chief Investment Officer at Diversify. Today we are going to discuss the much anticipated IPO of SpaceX. This will very likely become the largest initial public offering on record. There's been a ton of hype around this stock. And we just want to educate and provide some context about the IPO itself. We do want to set some expectations up front. This is not a recommendation to buy the stock or to pass on the stock. We're here to do two things. First, to let you know really how IPOs work. Sometimes the headlines don't really tell the full story of what that market is and how it operates. And second, we want to walk through what is inside this specific company, help you understand SpaceX better, its underlying business segments, fundamentals, and valuation. Let's get right into it. So the first thing to know before we even talk about SpaceX is just a review of the 5 things that really matter for any IPO. The first is lockups. Insiders typically cannot sell for 90 to 180 days. When those windows open, there is supply that hits the market, and that can pressure the stock price. Second, this is really important, is allocation. So big institutions typically get first call on shares. They the first opportunity to invest in the companies. As retail investors, we may get a small piece or we may get nothing at all. Third is voting. Founders often hold super voting share rights, meaning we as investors get the full economics of the stock, but really don't have much say in how the company is run. Fourth is profitability. Very important here. A lot of new public companies are still losing money. They're negative profitability companies. So knowing how long until a business actually is self-funded is really important. And fifth, sizing. Day one swings at IPO are very normal. So treat any single IPO as a very highly volatile position, not a core holding. So let's keep those 5 things in mind as we consider investing in something like SpaceX. So here is the deal at a glance. Here is SpaceX summarized in terms of what the IPO is going to be. It will be trading on the NASDAQ next Friday, June 12th. They are raising a total of $75 billion. Again, this is a record amount. The target valuation for the company is about 1.75 trillion. Just to frame that value, at the end of May, there are 14 total companies in the world that have market caps in excess of $1 trillion. Many of them the Mag 7, etc. So just to call out kind of the size of this IPO, it is extremely rare. We're showing some of the offering structure down below. We mentioned that in terms of voting share classes. The lockup schedule in the middle is important. This relates to supply and demand. When private investors of SpaceX and insiders of SpaceX reach these schedules as far as liquidity, the ability to liquidate their shares, usually it puts some downward pressure on the stock, or it has the potential to put some downward pressure on the stock. This deal is underwritten by 21 total banks. Goldman Sachs is the lead book runner. And importantly, down below, index eligibility. This has received a lot of headlines because indices have altered and massaged and lightened their index inclusion eligibility. In this case, the NASDAQ has said within 15 days of listing, the index and all of the vehicles that follow those indices will be able to buy shares of SpaceX. Typically, that's a much longer eligibility period. Let's look at what SpaceX actually is. It really is three companies in one. And I don't think this gets the attention that it probably deserves. So first, let's look at the profit engine. Connectivity. This is Starlink. This is really, the engine of the entire company in terms of profitability. It's the satellite internet. In 2025, it did $11.4 billion in revenues, and you can see its operating income of over $4 billion, very healthy margins. Revenues are growing about 50%, as you can see. Operating income more than doubled. Starlink has over 10 million subscribers globally, and it has over 10,000 satellites in orbit. So this is that generational company. It funds everything else. It has a head start. Doesn't mean it's not without long-term competition, but it's very exciting. The what you could call the reinvestment engine is space. So these are rockets, Starship. They have about 4 billion. This segment has 4 billion in revenues. A small operating loss last year. They've done roughly 650 orbital launches with a very high success rate. Um, they've poured $15 billion into Starship. The growth option on the far right is really the wild card. This is AI. It's Grok, it's Cursor. The XAI merged with SpaceX in February of this year. This is really interesting to think about in terms of its total potential, even though right now this is a money losing operation. You can see in 2025 they lost $6.4 billion. They, like others in the industry within the AI, are just throwing a ton of capital at this long-term multi-year build out of AI. And so this is one of those wildcard pictures that has a wide range of potential outcomes. So you have a cash machine on the left, kind of a moonshot, pun intended, in the middle, and a money furnace, at least in the short term, all within SpaceX SPCX. Let's look at the consolidated financial picture. So in 2025, I mentioned the segments. You can see it generated roughly $19 billion of revenue as a company. That was up about 33% year over year. If you strip out AI, the company's profitable, so that's interesting to note, but certainly lost a fair amount of operating. It had a fairly large operating loss in 2025. Here's what this really means to you, and I'll say it again: is you're buying a profitable business, the satellite business, but it's stapled onto a money-losing AI bed and kind of a long-term potential winner in space as they explore the final frontier. So this may lose money for years. It may flip to profitability in several quarters or maybe a few years. Really tough to say at this point. So how do you take all of this and start thinking about a valuation? I mentioned the $1.75 trillion that it will price at on June 12th. This is one way to look at it. So let's talk about, traditionally, if you have a money losing company, how do you apply a multiple on earnings when you're negative, right? That doesn't make intuitive sense. One way to do that is price to sales, right? We talked about the 20 billion of sales they put up in 2025. It looks like on a price to sales basis on a 2026 number, it might come out right around 80 times price to sales. So, another way to look at evaluation is to say, let's look at a sum of the parts. Let's take the three operating segments. Let's find some comps. Let's figure out maybe what some other companies that play in a similar space trade at, and then try to blend them together to form a total valuation. So let's do that. Connectivity, this compares to some degree to the T-Mobiles of the world and the Verizons of the world. Those are trading at 300 and 500 or 300 and nearly $200 billion in terms of total market cap. If you were to take the revenues and apply, a decent amount of multiple on those with very high growth and very differentiated, it's not unreasonable to get to maybe a 300 to 500 billion dollar valuation. So you can see that in that light blue section on the top. For space, certainly no public pure play comp on this. I mean, this is optionality. It's what is your Starship cadence? What are those government contracts? What is the long-term, multi-planetary Mars narrative in terms of, becoming a multi-planetary species? Mostly a call option. There's data centers in space that's been talked a lot about. We are thinking, with a wide range of potential outcomes, that this could be 100 to 250 billion dollar valuation for that segment. Down below on the AI piece, this is one where there aren't pure play public comps, but we certainly have other pure play private market comps, two of the most exciting, and both of which will be coming public probably later in 2026. In Anthropic, that just raised around at nearly $1 trillion valuation in the private markets, and OpenAI that's about 850 billion. So you can kind of take those two and say, well, with XAI and Grok and Cursor, add all that up, it's not unreasonable to think that you might be somewhere in that 500 billion to $1 trillion. So adding those up, it really gets us about $1 trillion to 1.75 trillion on the upper end. And that's, of course, today. That's the top end of the range. So for this to pay off down the line, you rely really on AI being a big driver of that value, of that valuation going forward, and everything else kind of working. One thing that I think is really important to mention here is this private markets versus public markets dynamic. This is a multi-decade trend that I think has really quietly changed the investing landscape. We've said before that today, much of the value of these companies that come public have already been accrued to private shareholders of these companies. And the reason is these companies are coming public much later, much larger at higher valuations, so that appreciation has already climbed a lot and compounded through years and years. And by the time it hits the public markets, like we're seeing with SpaceX at $1.75 trillion valuation, it's already grown tremendously. So we look at, the median age of IPO. You can see the comparison, 8 years, in 1980 versus 14 years more recently. Revenues, for example, are up a ton. We showcase a few examples down below in terms of IPO years, the age at which they came public, the market caps at which they came public, and the corresponding value today. So the takeaway here is that, different from decades ago, now the private markets, private equity and venture capital, really those investors are gaining a lot of the value in those markets versus it coming to the public market much later than they are today. So something that's also really important to mention is what the history books say about these mega IPOs. Do the biggest deals reward day one buyers of the stock? And history tells us to be a little bit careful for these mega deals. So IPOs as a category do fine. You can see that this data, goes back, segmenting 626 IPOs, and you can see they do fine. They roughly maybe a year out do a little bit better than the overall market during this time period. But look how different these are distributed in terms of the deal size. We think this is really interesting. The $50+ billion range, which of course is where SpaceX will be, has not performed very well through time. So looking out 3 months, 6 months, and 1 year, it is the worst performing of those different buckets. Now, the big disclaimers, there's only been 7 of those. And these are, so the sample size is very, very small. So take these numbers with a grain of salt. But it's interesting to look at some of these and reflect on how they did out of the gates. I was fortunate enough to attend the Facebook, at the time Meta, today, investment roadshow, the IPO roadshow in 2012. This was a very exciting, much hyped IPO back in 2012. And, it turned out to be kind of a disaster. It was down 50% in the first 4 months after its IPO. People started calling it face bomb. And, of course, the stock today is one of the most valuable companies in the world. It's a $1.4 trillion company, very exciting across many elements. And so, doesn't mean that these don't recover, and it does not certainly mean that they can't do well following an initial period of choppiness. But just look through some of these examples when thinking about these mega IPOs, because they are, historically hit the hardest on average, especially when liquidity surges in terms of selling pressure when insiders and private shareholders are able to sell their shares. So here is the summary. That this is just, for those of you who know us well at Diversify, we always want to look at both sides of the picture. This is the bull case on the left and the bear case on the right. The bull case, let me just give you both cases really quickly. The bull case is Starlink is a generational asset, and it throws off a meaningful amount of cash. The AI piece, this is a credible long-term story. It's kind of like a long-dated option. Index inclusion, I mentioned, could force a lot of passive buying. So demand currently far exceeds supply of shares, given the small float relative to the overall market cap company, or market cap of SpaceX. So that could support a one-day pop. It could support a multi-week or multi-month pop. Absolutely. On the bear case side, it's a money-losing company. The losses are pretty heavy and they're growing. The staggered lockups create predictable selling, and that begins in September and then kind of rolls through. And the valuation, it really prices in a pretty rosy scenario. It prices in some best case outcomes potentially, which just doesn't leave a lot of room for disappointment. It means that, the company better, operate really, really well for the first few quarters and years. The one thing I would say that I didn't mention earlier is SpaceX needs to be viewed more like a venture capital investment, meaning these are very long-term assets. What we just talked about with space and satellites and Mars and AI and the build out and the time it will take to get a return on investment of those are not measured in weeks, months, quarters. They're certainly measured in years or a decade plus. This is a very long-term view of a company, the fundamentals of this company. So we would advocate very strongly that your hold period would also need to be, also need to correspond with that long-term view. So here's just a few maybe points for you to consider as you think about participating or not in the IPO of SpaceX. These are questions to bring to your advisor. These are things that we think about, and there's some behavioral components here that would maybe help you think through what size of position you might want to take. We think the expectations piece is really important. because we need to manage expectations around getting shares in this IPO. There's a lot of demand, and your order may be partially filled or it may not be filled at all. Certainly, day one moves, as I mentioned, can be violent in either direction, and so having a game plan for how to react to either a pop or a sell-off or a flattish moving stock, like what is the game plan in advance? Are you going to add? Are you going to trim? There's those kinds of considerations that you should make prior to deciding to invest in SpaceX. Um, from a sizing standpoint, we put a couple of bullet points down below just to help you think through what those could be. And these are questions to talk with your advisor about, and make sure that this investment is aligned with your financial objectives. I mentioned the time horizon. If you have a shorter time horizon than a decade, this may not be a good sound investment for your financial plan. But of course, that varies individual by individual, family by family, institution by institution. So that's really the picture. SpaceX is a remarkable company. Uh, Generational leader in Elon Musk. This is frankly it's a historic deal. However, the valuation asks a lot, and it asks it about down the line in the future. It's not about a few years or a few quarters. Just a reminder that this was an educational webinar. This is not a recommendation, and we acknowledge that your situation is unique. So please consult with your advisor before you make any decision. And we thank you for your time, and we hope you have a great afternoon.